Alrighty, ladies and gentlemen, we are back. So let's get started. Welcome to Tradable Tuesday. Like I said, my name is Yaroslav Burchenko. We got everything figured out and under control. Please go ahead in chat, put that you can see and you can hear me well. That would be fantastic, and we'll get started. So what happened in the markets on Monday? This gap down was quite interesting. You guys can see this here. This is the S&P 500. This is the tradable ETF called SPX. So this last red bar right here, that was Monday, and that was a pretty serious gap down. So I turned on chat now that I can see you guys. I'm just double checking to make sure that everything's okay, that you can see me and hear me loud and clear. Perfect. All right, wonderful. So let's get started with today's lesson. This candle was an interesting reaction after the government shutdown was canceled. Like we said yesterday, for 35 days, the US government has stopped functioning. That costs a lot of money to the government. There's an organization called CBO, the Congressional Budget Organization. They predicted that the total loss for the shutdown was $11 billion. And in GDP figures, it figures to around 0.6 of the yearly GDP. So quite a lot of money lost there. Respect for Trump lost there. And let's look at the graphs and see how it affected. I wanted to show you guys something. There's an instrument called gap measure in percentage. I just want to show you, so since 2019, here at the bottom, this gap was the biggest that we had. So from good news, the result that we had was actually negative. So that's supposed to say a lot about the situation in the world markets right now. I want to remind you guys that if you have any questions for me, put them in chat, and at the end we will organize a 15-minute period where we can interact together. I can help you with your trading, and we can look at charts that you guys like. So first full day of trading of government shutdown turned out to be quite negative. It ended decidedly bearish, but still that formation where we have a gap up, a gap down is called an island formation, and that's not a very good, not a very tradable instrument. Now let's talk about trade wars and the Chinese currency. I have a lot of things to say. So this is the Chinese yuan. Kind of looks like it's increasing in strength, but recently the United States Department of Justice filed 13 charges against one of the top officials at Huawei. Now that is a government-owned company, and the person that they arrested in Canada is actually tied to the Chinese government. Now this is 2 days before China's Vice Premier Liu He was supposed to come to the United States and talk about trade wars. You know, that's not a very softening move from the United States. And we talked about this yesterday, about how big of a global impact the trade wars are having, because China is a huge consumer of commodities, and also they're really integrated in the emerging markets. Also on the top news, let's finish with the Chinese yuan. There is an opportunity, actually there's a risk. So everything is not so good in China, just so you guys know. There's a risk of flight capital, and there's a risk of illiquidity. So the Chinese government has been pumping more money, so they've been doing their own quantitative easing into the economy in order to avoid a recession. Now this is pretty interesting news. They're concerned, and that concern includes capital flight. And that's also including foreign investments. Now, this is the Chinese yuan. This is mainland China. How do you think, go ahead, write me in chat, you guys. How do you think money leaves China? There's a little bit of a window, and I'll give you a tip, but you can't just take a bunch of Chinese yuan and take it out of the country. But what you can do is, you can change those yuans into Hong Kong dollars. So this mainly is the way that money leaves the country. And you can see this very flat pattern here. What do you think that is? Those are Hong Kong dollars getting changed into US dollars and shipped out. Chinese buy real estate. Chinese have been buying a whole bunch of businesses and land in Africa, in Canada, in Vancouver. There's a real estate crisis. So the Chinese have been really active lately. And this huge spike up just means that more Hong Kong dollars have been leaving the country. Last week, here, let me get the economic calendar out for you, and I can show you what happened last week. China has been having a lot of weak economic data coming out, and the most important is one sec. The most important of it being the industrial output. So the industrial output was not only poor, it was miserable. It was negative 1.7, 1.9. I'll see if I can find it for you guys. One sec. So we'll clear all and we'll just pick China. Apply. Interesting, why no events have been scheduled. There we go. So for some reason this has a positive expectation, but if we look at this graph right here, we can see that there's a very strong downtrend, and China's not in a very good state, and the economic data is very worrying. There's a prognosis for the US government. Now we're talking about the trade war between China and the US, and the US is not in a good position either. So if both countries decide to go through with a very aggressive approach to each other's imports, that will not look good for the US. The same organization, the CBO, Congressional Budget Office, that estimated how much money was lost due to the government shutdown, they also, in that same report, made a prognosis on the state of the US economy. Now, because of the shutdown, they said that this year, 2019, the GDP is going to be lowered to 2.3%. You know, it was expected to be over 3%. Now it's lowered to 2.3. And over the course of the next 3 years, from 2020 to 2023, the GDP of the United States is expected to be around 1.7% yearly growth. Those are not good numbers to have a tussle with the second biggest economy in the world. And the same goes for China. So on slippery footing, this is not enough to facilitate ongoing trade wars. So keep an eye on both governments, on both of these currencies. And I just want to talk a little bit more about fundamentally what's going on in the US. And also, Tuesday's session is supposed to be pre-market. We have another 40 minutes together. Let's talk about pre-market. So there's 1, 2, 3 sites that I want to show you today. The first one is earnings. So this site right here, briefing.com, I'm going to send it to you guys in chat. You do have to register, but it's free. I registered a few years ago. This shows us a very simple list of earnings for today. Now, I wanted to bring your attention to yesterday's earnings of a company called Caterpillar. Now, they showed around 50 cents less. That's a huge percentage difference. And basically, they provide... And just a sec, there's something on the screen. Caterpillar provides a lot of the They provide a lot of the equipment that is used in building, in construction, and so on and so forth. I would say that they're the top company, and last year they were showing amazing returns. They're very heavily intertwined with China. A lot of their equipment is made in China. So the fact that their earnings were so negative, and look at this drop. Like that is a huge drop down, signifying that we are continuing to go lower. I would keep an eye on this company, and today, depending on how it trades on the first hour, so in 40 minutes, watch this this stock. There's a very strong chance that we will see more downward movement. See, we gap down, we move down, we gap down, a few more days down. So this is a trade idea that I want to give you traders, and one of the trends that I'm watching today. Now, back to earnings calendar. Let's take a look at what we have today. There is a massive inflow of earnings that really will affect your trading, and not only your trading, but the future of the markets in the short term. And I want to bring to your attention, so out of these companies, the more important ones, I'm just glancing this real quick, so forgive me if I skip something important. Pfizer, they're the world's largest producer of drugs. Verizon, one of the staples of US economy. But most importantly, Apple. Apple is going to be reporting its earnings after close today. Let's take a look at their stock. It has really declined from the top, and this was even before the December, November fall of the stock market. We were dipping down. So right now, this kind of looks like it might break to the upside. Just watch how earnings are, and they're expected to be $4.17 per share. That's pretty good earning. We'll see if they meet it or not. Now, another indicator for you to watch about what's to come is Wednesday's earnings. Wednesday's earnings are extremely important as well. As you see here at the top, we have Alibaba. But also we have, for those of you trading on the platform, just so you know, Apple, Microsoft, and Facebook are going to be reporting on Wednesday. So keep that in mind. So Apple today, Microsoft, and Facebook. Here we have Facebook reporting after the market close, and Microsoft. And for those of you that don't know, actually, Microsoft has become the largest company by market capitalization. That means from the amount of money that their company is worth, they are the biggest. And they also have a AAA rating. So actually, let's take a look at their... Now look at this. This is an interesting graph. This is a daily chart. Really does not look like the S&P. I mean, it does have a downward slope to it, and depending on how Apple reports today, I would be very keen on shorting Microsoft today or tomorrow in the morning, before market close. It's a very risky move. I normally would not suggest it, but because we're at such levels with Microsoft and everything is looking like it's going down, today's report of Apple is very, very important. So also another company that's reporting tomorrow that we have on our Limp Trade platform is Boeing. So let's have a look at that. So here they're actually reporting before market open. There we go, Boeing. BA is their ticker. And this company was a golden child for me in 2017. In 2017, I made a ton of money speculating. I held it for over half a year. And that was due to a lot of fundamental factors. But also you can see that this graph does not look like the S&P. So these are some of the more stronger companies, and still stocks remain one of the best investment opportunities in the world today. And Boeing is one of those companies that might be interesting for you to have a look at. Also today we have Lockheed Martin, for those of you that are interested in war stocks. As you know, so this is today's earnings. They will be reporting. They already reported. Here we go. So Lockheed Martin did not meet investors' expectations. This is a company that makes drones and other military supplies, and I believe guns as well. So really a stock to have in your portfolio if you believe in the empirical aggressive nature of the US. Also a very high dividend company. Let's talk about what happened yesterday. There is a lot of interesting things, and I promised you guys that I would watch and listen to what Draghi had to say. So let's get rid of this and open it from the Olymp Trade platform. That's tech analysis. Okay, let's do it like this. So Draghi spoke and Carney spoke. President of the European Central Bank and President of the Bank of England. Both had interesting things to say, more so Draghi. He blew my mind. So Draghi talked in front of Parliament, and where is it? So this week. Draghi spoke in front of Parliament, and he basically said that very well could be that they will turn quantitative easing back on. That is a huge change in rhetoric. Before, in December, Draghi said, that's it, we're finished, we were winding down the quantitative easing program. Yesterday, he came out and said that maybe we will turn it back on. Now, that is going to put additional pressure on the euro dollar. That's right. So here we have the euro dollar, which is already under a lot of pressure. There's a lot of volatility and not a lot of direction, so I wouldn't recommend trading right now. I saw client sentiment. People were very bullish right here at around 113. And as soon as that green bar drove up, instantly retail traders like you and I got off. Basically, they canceled their positions, took off their positions, because there's really no clear direction. We are in a flat. It was a good trade from there, but there is no fundamental factors as of yet, and there is no technical driver for us to see some sort of directional movement. So this is what I really want you guys to understand. Also talking about Brexit. Here we have a picture of the pound dollar. Now this is also a very interesting picture. Let's take a look at how many consecutive candles have been opened. So out of the last 10 days, we've only had a few consecutive, a few red candles. This is unsustainable. So if anything, if you were to have any kind of trade to fade some sort of movement, there is more opportunity for the pound to fall back right now than there is for it to grow. There's not a lot of drivers right now out in the market. We can actually look at different crosses with the pound. One of them being the Canadian dollar. Because the Canadian dollar is actually, let's take a look at dollar CAD so you have an idea of where it is right now. So we broke through the channel as we discussed yesterday. Today's day shows us nothing. I really have to keep in mind that my face covers a lot of the graph. So today's movement is minimal. Not a lot going on. Looks like a doji candle. But as you can see, we are also not pushing past the channel. So this is a point of reversal. I want you guys to keep the Canadian dollar in mind. We'll talk about it a little bit later. But coming back to the pound. This looks like a nice opportunity to really work with two themes. First theme is that the pound is overheated. Second theme is that right here we are also coming up to, or sorry, that the Canadian dollar is also ready to make some movement forward. And I back that up with what's going on with oil. So oil is at a very particular point. That's a very clear-cut head and shoulders pattern. Right now there is no direction, and with this market I really want you to focus on demand. Supply is at its maximum, but as long as industrial output and other economic data from China remain high, oil will be in demand. So look for momentum and look for fundamentals when trading and speculating with oil. So CL1, just for those that don't know, that's West Texas Intermediate. That is the US form of brand or brand of oil. And one of the fundamental factors that I wanted to get across to you was that Russia has stepped up and promised to increase its cuts, actually to even start cuts, because last month they reported maximum supply. So they're producing at maximum capacity. Back to the pound scenario. Another interesting situation for you to look at, and just like I said, remember you guys, yesterday I said that if we reach this channel here, it's a great resistance point that we will jump off. And for those of you that keep wanting to see me live trade, you can see how good that signal worked. And if you would have put an order at 87 for the short side, you would have been in profit, and I would even recommend to solidify that gain today. Now, another thing about the pound, as you may well know, we are going to have a vote tonight. UK Parliament vote on Brexit deal. Now, what does that mean? So May has won her no confidence vote. Her government has also won the no confidence vote. This vote will be on her Brexit plan. Now, with May, her position is that she will not invoke Article 50. That means an extension of the Brexit plan. Also, she will not allow a second referendum, not giving the people a voice. And the third part is that she can't get support for her proposal. And today's vote is exactly going to be that. So again, if you're looking for some action on news, I would definitely watch the pound. We don't know what will come of it, and we don't have a clear understanding of how Parliament in Britain is positioned and what if she will get approval for her plan or not. The risk for the pound to fall is very, very high. Very, very high. And as you can see, we have some sort of downward movement. We're looking for momentum on the way down. The currencies that I would recommend to look at are the euro pound, great shorting opportunity, and also pound CAD, another great shorting opportunity. Later in the week, tomorrow and on Thursday, we will discuss other economic figures that are going to be coming out. But I also wanted to look at gold with you guys. Right. So here we go, gold. This is the flag pattern that I was telling you guys about. Remember on Monday I said let's watch, here let's drop down to a lower time frame. Let's watch what gold is going to do. As you can see, gold has played out the pattern. Now please keep in mind that a breakout does not ensure a follow through. If you were in a trade like I recommended you to be, take your profits now. It's always better to have your profits than not have them. The reason being is that gold, we are uncertain that exactly gold is going to continue rising up. Over the course of the year, it'll be a great investment. But for the time being, if you have already capitalized on your trade, that's great. Congratulations. Now let's talk about what is gold. Gold is a safe haven asset. It takes advantage of any financial and fiscal instability. So political and financial turmoil, gold is perfect. So this coming 2 days where we have a lot of economic data and fundamental factors coming out, it's a perfect opportunity to use this instrument if you hear bad news. This is basically our out if things go bad. Now, volatility will continue for currencies and the stock markets. Direction will be difficult to appropriate. That's why we as traders are going to use the earnings of Apple, Microsoft, and Facebook. Those three companies, and Boeing as well, they will give us a lot of sentiment information, more than what the S&P shows us itself. So watch out for those earnings. Really let them show us what their plans are for investing, for purchasing, for spending. All right, tomorrow will be our leading indicator for the week to come. It's actually going to be more important than the GDP figures for last year. All right, so for the last quarter, let's look a little bit at some of the things that are going in the world, and I'm going to teach you guys a new indicator. A lot of you may not know about this ETF, but this is an indicator of all of the world's stock against US stock. So basically, think about it this way. Like on one side, we have world stock. On the right side, we have US stock. So the fact that we are overweight onto the side where the US stock is at, it means that the US stock market is still the main driver. So again, if you're very keen on looking for investment opportunities in the stock market, the US stock market is definitely the one to look at. Now, I may have shown this before, but the ACWI is from Morgan Stanley Capital International. It is an indicator of the world stocks. So as we can see, we were in a flat. If we take everything together, it's not, you know, the world versus the US, it's everything together. This is the same picture that we have for the S&P 500. Also, let's take a look at emerging markets before we finish. Another island formation, not very tradable. I would look at Brazil and Mexico and Turkey as markets that might be interesting. Although I know that in Brazil recently a building collapsed that was government owned, but it wasn't government owned, it was owned by a mining company, the biggest diamond mining company in the country, but it was also partly government owned, and so there's a lot of turbulence due to that, but solid in their economic projections. And last but not least, what's happening with the dollar? I'm just going to open up the clear DXY. We see we're sort of in a you know, lower position compared to where we were a few months back, a quarter back. Now, the thing that I want to get across to you guys most is that Fed funds futures, basically those are official futures that you can find traded. They are pricing in one increase of interest rates, not two, but one. So that's very important information, and we will hear about it tomorrow during the interest rate decision. So keep tight. If you guys enjoyed this webinar, please give it a thumbs up. Please write some comments. That way I know what's important to you. I know things that you liked or maybe something that you didn't understand. I will write back and explain to you. And giving us a thumbs up will help this content reach a broader spectrum of people so that we can all learn a little bit more about this difficult game of trading. Difficult job. And as a special prize for those of you that stuck towards the end, I'm going to show you another website. Here we have nasdaq.com/quotes/premarket ASPX. This will show us what, say, Apple is doing pre-market. Now, mind you, this is NASDAQ. This is a tech stock index. But here we have each and every trade that went on pre-market, how much, and at what price. So you can see like this, or graphically, pre-market charts, what happened with pre-market trading. That is to help you guys gauge. So this is for today, Apple. So they are, after the market close, going to be reporting. You can also see that here in the link that I showed you guys.